What's going on? 7 o'clock. Just give me 1 second. We're getting ready to get started in 1 second after I end up getting everything set up so I can be able to make sure that I'm monitoring everything. I see that I have YouTube ready to go. Facebook is ready to go. We're in actually 49 seconds within doing that. Let me turn that on mute again. And we have we're getting ready to go live on IG in 1 second. So once again, I hope everybody's doing very well. What I'm going to do is I'm going to type in the actual link for the Believe in Yourself Bootcamp in everything before we end up getting started. So copy. Paste, bam, okay. And right here, bam, okay. And here we go. And we are live. This is Travis Witherspoon from Carter Cow Trading. Carter Cow Trading on YouTube. Trade with Travis on. I'm sorry, Carter Cow Trading on Facebook. Trade with Travis on YouTube, and obviously Carter Cow Trading on Instagram. Hopefully, everybody's doing very good on this Monday morning. I have 7:02 a.m. Started on time, ready to go. Feel refreshed. Hopefully, you end up having a very good weekend. Let's go ahead and lock in. Let's see what we can be able to find for some actual trades. So. I'm not a CPA. I'm not a CTA, so I'm not going to tell you what to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. That involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So showing myself onto the screens, I can see myself on Instagram. I can see myself start to hop on. There it is on YouTube, and there it is on Facebook. There we go. Hopefully everybody's doing very well. You do not know who I am. My name is Travis Witherspoon. I am a Forex trading specialist, and what I end up doing is each and every morning from 7 a.m. to about 7:30, sometimes a little bit later than that, I end up teaching people how to be able to trade, look at live Forex trading and analysis to be able to help you out for being able to get started, and also to be able to help my bank account out a little bit when it comes down to trading myself. Now, I've been doing this for the last We've been doing Trade with Travis for almost going on almost 9 months now. We're getting very close to being about. I'm sorry. It's been about right around 7 to 8 months now. We started up in March, so been doing that. Yeah, it's been about 7 months now. We've been doing it since March, and each and every morning, like I said, we just go and take a look at some trading pairs, see if we have any opportunities, and then after that, we end up going from there. Now, at the end of the month, on each month, we end up doing something called a Believe in Yourself Bootcamp, and today is the actual day when we actually end up doing it. So, if you're not a part of the Carter Cow Trading Academy or anything else like that, and you do not know what the Believe in Yourself Bootcamp is, basically what that is IG boy, what's going on? And basically what that is, it's a 5-day experience where from 9 to 10 p.m. Eastern Standard Time, we end up going over Forex trading, being able to teach you how to be able to trade, being able to help you out for being able to find brokers that are U.S. regulated, non-regulated, and everything else. Help you out when it comes down to strategies, help you out when it comes down to equity management, and teach you how to be able to trade from the start. So if you do not have any trading experience, this is the actual boot camp for you. 5 days of being able to learn all that stuff, and it's literally $20 a day. It's so very much of a deal on being able to get that done. But today we actually going to end up starting off with day one. So if you have purchased your ticket, if you have reserved your seat, a little bit later on today, you're going to end up getting your link to be able to get in. We still have seats available. We still have slots available. So if you're interested in being able to hop in, once again, please take advantage of that. You can go to bit.ly/believe in yourself Forex and be able to reserve your ticket from there. And be able to go from there. But until then, let's go ahead and get on the charts to see what's happening right now. We'll talk about that a little bit later on. Obviously, I know that some people have some questions and stuff like that, and we'll go from there. Oh, one other thing. Got a new, ended up getting a retwist. My hair is getting stupid long. This is the longest that it's ever been. And obviously, I've been posting videos about my journey and stuff like that. So the people that have been sending comments about that, I do appreciate that. It's something new. Like I said, it's a different experience, but having fun with it. All right, so let's go. A little bit earlier today, Germany ended up having a business climate, current expectations, and expectations to actually end up coming out. The Chicago Fed National Activity Index is going to end up coming out, and we're going to end up having Chairman Jordan's speech from the Swiss franc. Now, typically Switzerland doesn't have that much news that typically ends up coming out. So I'm guessing when he's going to say something, it's going to mean a lot, and we expect to look at that right around 10:30 today Eastern Standard Time. So please pay attention to that towards his overall movement. But from here, basically what we're looking at is a trader's day overall. Now, if we go through and we take a look at the big three and being able to go through, you do not know what the big three is. The big three is the US dollar index. We end up taking a look at oil, and we also end up taking a look at gold. The reason why we do that is so we can be able to correlate what's happening with that to the overall market and get an idea about what we need to do for the overall pairs. So we're looking at this from the US dollar index. We can see that this market is considered to be bearish at this point in time. The weekly has opened up, and it has opened up beyond the trend line to the downside. So even though that the market is not necessarily in the sell zone, we do have selling opportunities. So keep that in mind when it comes down to the rest of your trading going into this week. I do expect that the market is going to end up being bearish. So what we're trying to do is find high prices in the sell zone to be able to sell with that. And we always want to trade with confirmation for us being able to do that. Now, once again, this market is not in the sell zone, but we do have trading opportunities to be able to look at for us being able to sell. I'm going to give you a sneak peek on what we end up doing inside of our masterclass so you can be able to understand what trades we actually end up looking at as well to be able to get in. So the weekly is considered to be bearish. If we look at the daily has started off basically breaking out of this trend line. We're basically in the middle of retesting this overall trend line right here. And if it breaks below this overall trend line, this purple one that I have very small, if it goes below that, then this market will be considered to be fully bearish for that movement. Now, where's the market expected to go if that happens? Well, what we're looking at is that we see that this market, let me erase that. Let's try this over again. We can see that this market has broken out. It's in the middle of a retest, and we expect for the market to be able to fall. The market continues to fall. It's expected to go down to the daily D extension at 11,548 for its overall movement. Okay, so the market is considered to be bearish. It's not necessarily in the sell zone, so that doesn't necessarily mean that we can swing trade, but we can. That we can't swing trade for a lot of pips, but we can swing trade in general to be able to go after a certain amount of movements. If you're only interested in being able to scout the market on this movement, then that's a fair thing to be able to do as well. Okay. Now, let's take a look at oil. Remember, when we were taking a look at oil, we said that we wanted to be able to sell this market all the way down to $37 a barrel. We ended up getting into this trade last week. The market ended up stopping us out right here on this overall wick, and then turned around and retested it again and fell right back down to the downside. Now, it fell down to the downside without us, unless you end up taking that trade again when the market ended up retesting around $41 a barrel. If you're not in this market, what I would do is I would just say, just wait for something to be able to happen and be able to go from there. If you want to look at this from a 2-hour perspective and say, okay, can you get in from a 2-hour perspective? There is a slight consolidation pattern that has happened right here. On this 2-hour, we can see that this market has broken past that overall support, and has turned past support in the future resistance. But currently, it actually has hit a D extension at 38.46. So now, what is the overall expectation? The overall expectation is that I think that the market is going to probably end up moving up to maybe $40 a barrel now. This market will consider to be trending after this actually ends up happening from a 2-hour perspective. So if you do want to sell this market, I would look to be able to sell right around the $40 a barrel mark. And then after that, look to be able to sell it down to its lowest low, which will be about $37 a barrel. Now, if you're looking at this from a daily position and saying, okay, can you trade this from a daily position and being able to stay into it long? I would kind of shy away from that. We know that we're in daily consolidation, so we wish that we could have stayed in this one a little bit longer and actually stayed with the overall move. But if you're already in the move, I would say manage it and then let's go from there. And that would end up being the overall idea for this trade. But oil is expected to be bearish, which means that the Canadian dollar is probably going to end up expecting to have a little bit of bearish movement from there as well. All right, so let's take a look at gold. If we look at gold, remember gold correlates very well with the Japanese yen and being able to see what's actually happening. If we take a look at this from a weekly perspective, we can see that this market opened up inside of the buy zone. So we are looking for potential buy trades for us being able to get into this market. That means that we are looking at the Japanese yen to kind of get a little bit stronger as well as the Australian dollars. You want to keep that in mind. We've broken out of this trend line. If I can get to it real quick. Let's see. Let's try one more time. Okay, there we go. So we've broken out, we retested from the bottom, and we're starting to push back up. The market's starting to fall down right around that 1894 area. When we ended up getting into this trade last weekend, for the people that ended up making money on this trade, congratulations. What ended up happening was that we was having a daily channel that was actually working within this overall area. And the D extension was expected to be at 1942. Now the market is still within this overall. The market is still within this overall ABCD swing, but it has broke the channel to the downside. But the one thing that I am noticing is this: if we take a look at how the market is basically what the market has basically fell down to, and where it's done found support at, it's done found support just below that 1894 area, just right around that 1900 area. So what does this mean? This means that you can still look at being able to trade it to the upside, even though the market was still considered to be in consolidation. You just have to be a little bit more careful about it, and you know that you have to place your stop below 1894. Your stop has to be below 1894 to be able to stay in this trade. Now, you're looking at this from a position trading standpoint and saying that you want to be able to get in. I will place my stop below 1872. That means that you'll have to lower your risk a little bit, but you can stay in this trade a little bit longer if you decide to be able to do that. If you're looking at being able to scalp this market, what I will end up doing is going to the 2 hour. And the first thing that I want to be able to see is this: because this market has broken out of support, and then after that turned support into resistance again, right here at the 1894 area, you can see that it broke, it fell. This is a classic breakout and retest type of move. We talk about this all the time, right? We have our breakout right here. We have our retest. The market retest and failed, and then after that fell down again. Now what has happened is that it's found support in this overall area. So the question is, are we looking at another smaller consolidation move that we're moving at and we're hitting the bottom side of this overall channel? Or are we going to break inside of this overall moves to the upside, retest this, and then keep on going back up? I'm going to stay out the market until I'm going to stay out the market to be able to figure that out. Now, the only other thing that I will look at for us being able to get into this trade is that, okay, we've seen that this market has hit 1894 and retested to the upside. If you want to be able to get into this and be able to trade this back up to the channel high, you possibly could. That means that now what we're looking at is a smaller consolidation area, and that smaller consolidation area will probably end up being right about right here for this overall movement to the upside. And that's what I'll be paying attention to 1912. So you have about, in this case, you have about 8 points that you can be able to go after. The question is it worth it at this particular point in time? My answer would be no. So that means that I'm not necessarily looking at being able to trade on a US yen. So let's go back and let's review real quick. We looked at this. We said US dollar, we're expecting to be able to sell. We're looking at selling opportunities. We look at oil. We're looking at if you're already in the sale, that's great, but the market is in consolidation. So we're looking for a little bit of help to be able to push this market back up to be able to get in. Gold, we're looking at this and we're saying that, quite frankly, the opportunity to be able to sell, the opportunity to be able to buy on this and go up to 1942 end up failing us. If you end up getting the market or taking profit when the market went up to 1932, congratulations. If you end up taking a loss because you stayed in as a swing trader, then there was a small loss. The question is, can we be able to get back into it? We could. We just have to wait on the best move to be able to get back into it from there. Okay. So hopefully that makes sense for the overall trading pairs and being able to get in. One other thing I want to go ahead and take a look at is the NASDAQ 100. We look at the NASDAQ 100, we can see that the market is in the buy zone. And that's what we expected. We see that the market has pushed down to the buy zone. We see that there's a point of control that's starting to loom at 11,332. If that happens, then the market is going to fall down to at least the deep 8-6 position right now. Now, with the market being in a buy zone, I am only looking at potential buys to be able to get into this trade. So as we work through and we look at this overall move, the expectation is that if we get a breakout of this overall counter trend line break to the top side, then we're good to go. We're seeing that this market is finding a lot of support right around this 11,600 area. If we can be able to catch it right around that 11,600 area and maintain that overall position for it being able to buy, I think that'll be a solid position to be able to go out there 12,911 and be able to place your stop about 400 pips down below that actual position. Now the question is, should you get into that right now? What I would look for is I would actually look for a low price in the buy zone on the 2 hour. If you get that, then I think that you'll be good to go. And being able to go from there. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Typically, you have 7 to 11 days when it comes down to the stochastic for it being bearish. We're right in that overall zone for it being able to look towards a potential buy trade. So I am interested in being able to do that. So let's go to the 2 hour. The question is, okay, where's the 2 hour going? Can we get in on the 2 hour for us being able to trade this to the upside? Okay. Now, if we look at this from a downfield perspective to see what a market could potentially land to before actually getting into the trade, we can see that this market has a ABCD swing that is not fully completed yet. The market went from your A to your B, went all the way up to 11,969. Remember, that was the trade that we were talking about last week, right at the beginning of the week for our Sunday to Monday trade. Remember, that's typically our most impactful trade that you was able to get into. This one actually ended up falling down all the way down to the 11,600 area, which is 300 pips that we expected that the market was going to end up falling down to. Found consolidation, and now the market is expected to go down to 11,478. So what I would look at being able to do, if I could be able to get in on any type of trade within this overall area, I would keep on allowing the market to be able to fall. I would love to be able to get in right around that 11,478, 11,500 area for us being able to buy with confirmation. If you get that and the market ends up falling down to this overall area, understand that you probably won't. You probably will get in. It'll probably end up being a quick move, and it'll probably be a decisive move for people to start looking at being able to buy from there. So you can do two different things. One, you can place a pending sale here and then hope for the market to be able to hit here and then find support and then start to be able to push up. Or what you can do is you can wait for the market to be able to hit that position and then see what happens after that overall move. We're looking at this from a point of control perspective. The market still has an area where it can continue falling down to 11,340 or 11,350 for that area. Okay. Now, what's significant about that is that we see that same thing. We see that same thing on the daily for that move, that 11,300 area. So I wouldn't necessarily look at being able to just hop into the trade very quickly if the market is going to end up going against us. I would look at being able to say, okay, well, can this market fall down to this 11,300 area, right? And then after that, find some support, and then after that, look to be able to buy back up. But anywhere around that structure, if it does give us that movement, then I think that's a very solid trade. It just means that the market would go up to 12,510 if it does happen like that. If the market maintains support and it starts to push back up, then just understand that we're pretty much in that same position right now to be able to get in and trade it for the long term for that move. Okay, so I am looking at potential buy trades. The buy trades are just not there yet. All right, now let's give a little sneak peek on what we are looking at right now. We ended up talking about this a little bit more. We said that overall that we said that the market was bearish. Well, what we do here is that we actually end up analyzing all of the different charts from an individual perspective and look at what is the probability of success on being able to win. The number one probability of success right now is the pound United States dollar. And I actually ended up getting a signal before we actually started this session. So we are going to end up taking a look at that first because we're actually trying to look at a buy trade to be able to get in. Hopefully I didn't waste too much time, but we're going to look at the pound United States dollar first. We end up taking a look at the US. We'll take a look at the US yen second. Then after that, we'll take a look at the US CAD third. But overall, if we're looking at the market is expected to be strongly bearish. I'm sorry, that needs to be bearish. For us being able to get in. And matter of fact, let me make that change right now. Which means that we should be looking at sell trades across the board when it comes down to trading on this overall pair. So let's take a look at the pound United States dollar as our first trade. We may have an active trade like literally as we speak for us being able to get in. And then after that, we'll move on from there. So if we go through, what we can see is this market on the weekly. Market on the weekly is basically close to the buy zone, but it's not there yet. We see that the market is basically popping back up to the upside. The next thing that we'll look for is this. When we go to the daily, when we go to the daily is, do we have a counter trend line break bullish on the daily for this overall move? Currently, as we are looking at it right now, we see that we don't have it for this overall move, but what's probably happening is on the 2 hour, the market has basically touched that overall area, but has not broken. Okay, so this is what we have. Market ended up falling down to the 5-0. Once it fell down to the 5-0, we end up getting a strong push of 50 something pips to the downside, basically attracting this overall area and opening up in this overall position. Now, here's the problem. It has not broken above this overall trend line. We have a strong move. We have a bullish engulfing candlestick. If you want to be able to trade based off of the bullish engulfing candlestick, then you're more than welcome to be able to do so. If you're inclined to be able to do that. That means that you're getting into this trade a little bit, you get into this trade early, and you can be able to ride it out from there. Now, I will look at a 2 hour trade, being able to buy this all the way up to the 133 area from this overall position. I do like that position for us being able to get in. We know that overall, we said that we wanted to look at being able to buy in this case. The daily trading range is 120 something pips. So currently right now, we're looking at it. The low was about 40 pips. The high from here was about 59 pips, so we're about 90 pips from that overall movement, which means that if you do see a pop up, you should expect that you're going to end up being up about 30 pips before the end of the day when it comes down to the daily trading range from a 2 hour perspective. If we look at this from a daily perspective, the daily trading range is still 100 pips. Market is at 52%. And we're at the point of where this market has found support before. I am interested in being able to take this trade. I'm not interested in being able to do this trade from a long-term move. I'm only interested in being able to trade this from a 2 hour perspective. Long-term, we're expecting that the market is going to end up going up to 138. Short-term, we expect that the market is going to go to 133. The question is, let's take a look at the risk reward and see if we should be able to get into it. I can see that the market is in the buy zone, but I see that the market has not broken out of this trend line yet. But let's say if we decided to be able to get into this trade, what would be the parameters? What I would do is I'll place my stop just below this overall swing low, which would be about 200 pips for the overall stop. So kind of basically what we end up doing, once again, kind of giving you a little bit of a sneak peek on what we end up doing inside of our masterclass all the time. We'll put in our account size. We're looking at how much it's actually going to end up being. We see that it's 200 pips from this move. We know that the market is at an R2 between both of these overall trades, but it's not at the best position. So I'm going to end up going with 4% on this trade. What is going to end up being the take profit? Take profit position, if we get in currently right now at this position right as we speak, will end up being about 312 pips from this overall move. I'm going to tell you right now that's not going to fit my overall risk reward requirements. If it's not going to fit the risk reward requirements, we're not going to end up taking a trade. I don't care how good the probability of success looks. We're talking about a 1 to 1.5. So essentially what I'm saying is if I get in with this trade right now, I'm going to be risking $324 to be able to make $505. Some people, that may end up being good to you. Me, it's not. I would rather be able to get in where I have a 1 to 2.3 risk reward or more. So what I'm going to do is I'm going to look to see if this market is going to end up continuing to fall and give us an opportunity to be able to get in for a overall lower trading opportunity. If this market continues to stay below this overall trend line, then what that means is that the market will continue to keep on going at this descending triangle type of movement, and then may end up getting us into the sweet spot area that we can be able to trade. Now, overall, I like what I'm seeing, but I would love to be able to get it down here in this area. So I'm not too eager to be able to jump out and be able to get into this trade based off of this position right now, especially the way that how much margin that pound pairs end up holding. If you are interested in being able to trade this, I could see why the market is in the buy zone, but the daily is not in the buy zone at this particular point. So if you do trade this, you're only trading this based off of a 2 hour movement. I will keep my eye out on it. If it gives us an opportunity, if it falls down a little bit more, then I'll consider it a little bit later on. But for right now, I'm going to pass on the pound dollar. Let's take a look at the US yen for the overall trade. That was the second highest rated pair that we were looking at. And this one has a lot of good stuff that is going forward. The only thing that it does not have going forward is where the market is on the stochastic. Okay, if we look at it from a weekly perspective, we see that this market is basically bearish. It has been bearish since the early portions of March. The market is expected to fall down all the way down to the crown the extension at 99.20. This market has had a hard time being able to break 104. Now, if the market does break 104 to the downside, then that means that we're going to end up seeing this market really push down to 101 very rapidly. Now, I'm going to show you that from a point of control perspective on why I think that's going to end up happening, because I think that's a little bit more important. We can see that the point of control on this overall move from the daily perspective is at 105.58. We tested it from the top side where we end up finding support. Now we went to the bottom side and we found resistance for this overall movement. Now the question is, can we get one more chance of the market basically testing this overall upside movement one more time before it falls? Now, that is a valid question if that does happen. If it allows us to be able to stay in this trade, or allows us to be able to stay out and be able to sell once the market ends up hitting this zone again and hopefully retest to the bottom side, then we're good to go. Currently, the market is in the no trade zone on the daily, so swing trading will probably end up not being the best position to be able to get into, especially if this market falls. But if this market does fall, we can look to be able to scalp trade for a certain amount of pips and being able to go after it. But keep this in mind. I'm going to zoom out so everybody can kind of understand this. If this market falls and doesn't hold support right around the 104 area, then there's no more room, or there's no more area of free support. This market will fall down to 101 and will fall down to 101 very rapidly. So what we're looking to be able to do is that we want to be able to get into this trade as high as possible that we can, whether if it's 105, whether if it's 104.87 right now as we're looking at it. But we know that the trading opportunity is to the downside, and we have all of this free space of where this market could move down first before going down there. Anything below 104, just know that if it breaks that position and you're already in that position, just stay and lock on and add more to that trade. This is probably one of the better trades to be able to get into if this market does break below 104, and you can stay in and you can remain confident on the downside movement. Okay, so that's what I'm looking at from a point of control perspective. If it falls and it breaks below 101, then that means that it's going to fall down. It's going to end up going towards 89. If it goes towards 89, then that means that the market is truly bearish, and that means that the U.S. dollar is truly going to end up being weak. Now, the question is, when is that going to happen? Is that going to happen before the election? Is that going to happen after the election? Is the market going to pop up because of whoever ends up getting voted for, or whatever may be the case? That is very valid questions to be able to ask. But the one thing that I would end up paying attention to is this. We know that we're basically close to a support area. And we know that the point of control is at 105.60. So I will look at if we can be able to get this market to be to probably get as close to that 105.50 to 105.60 area, and then look to be able to sell down. But better, more than that, I will look at being able to place in a pending sale around that position. I'll place my stop loss above 106.35 and be able to sell from there. For my masterclass students and everybody else, we're going to end up placing a pending sale at 105.50 with the hope that the market pushes back up. Now, currently right now, we can see that this market is in the no trade zone for selling. But if there is a counter trend line break that does happen, and it does happen to the downside, then we have to be able to trade it. Just understand that if it does happen, you have to be ready to go. There's nothing that, there's not more that you can control from this overall position if it does fall and break that 104 area, and be able to go from there. Let's see, because currently right now, if we look at it, we're bouncing off another moving average right now. We're bouncing off the 50-day moving average as we speak. So if this market does break bearish, just know that that's where the trading is going to end up being. We already broke down and found all of this. We found this light resistance from 105.30 all the way down to 108.37. There's not that many traders that are in this market just from a 2-hour perspective and looking at point of control. And if there's low volume in this perspective or low volume in this area, then the market's going to fall rapidly. Okay, so any signal that you get for us being able to sell, to me, stochastic doesn't matter anymore. If we get momentum on this trade, then look to be able to sell it and sell it to the downside, and just know that once you end up getting that sale, that you're going to end up staying on that sale for a while, and being able to go into that. So what I will end up doing is this, and this will be the last trade for us today. I'll place in a counter trend line break right here. Want to see how far this market is going to end up falling, or how high this market is going to allow us to be able to stay in on this overall trade. But once it breaks to the downside and gives us one bar, then look to be able to sell it. Don't hesitate. Just understand that you're going to end up selling it down to 101. Or better yet, you can sell it down to 99 and feel very comfortable with that as well. Okay, crossing down the trend line. Stop will end up being 106.35. Take profit will end up being 101 to 99.20. So I have that placed in. I have that alarm set and ready to go. And once that alarm gives me to cue to be able to take the trade, then we take the trade and we're good to go. So now you allow the computer to be able to monitor it for you. You don't have to be able to stay in this. You don't have to be able to stare at the screen. You don't have to be able to do anything else like that. All you have to do is just allow the market to be able to make this trade and be able to go from there. Now the question, some people end up saying, okay, well, you're giving up about 14 to 20 something pips if the market ends up falling down and breaking. Yes, that very well may be true, but sometimes trading with confirmation is almost a better thing to be able to do, because let's say if this market does this, instead of falling down on this trend line and this breaking, and you get in right now, let's say if the market just continues to gravitate and go up, right? We would love to be able to have a pending sell at 105.60, right? If we end up getting that 105.60 for its overall sale, then that means that we end up having a smaller stop loss, right? A smaller stop loss in this overall position means that we can add on more towards the trade and be able to get in a little bit more for us being able to manage that trade. So it's all about perspective when it comes down to being able to take that trade and being able to get into it. What I would say is that I would just wait, I would manage, and then after that, let's see how this market kind of plays out. This market is not in the sell zone yet, so that means that it could push up and get a little bit higher, even though that the market is expected to be bearish for US dollar pairs, doesn't necessarily mean that the market is not retracing. And there will be some people looking to be able to scalp the market and be able to trade the US dollar up. Allow them to be able to do so. What that does is allow you to be able to get into a better trade for us being able to see that. That's the exact same thing that ended up happening right here when the market fell down, went back up to that 105.50 area, and then dropped again. So we're trying to do that same exact trade, right? We go back and take a look at what happened right here for this overall position. When the market hit 106.14, when we was looking at being able to sell it, allow the market to get all the way up there, counter trend line break, bearish, boom, you have confirmation of being able to sell. Right here, do it again, bam, you have confirmation of being able to sell. So just be patient, allow the market to be able to work its way out. Once it gives you the sale, take it and have confidence in it because it's ready to go. Okay, you like what we end up doing, you will love what we end up doing for our overall boot camp. Once again, please make sure that you end up taking the time to be able to invest in yourself. We end up doing this, it's going to start today from October 26th at 9 p.m. to 10 p.m. For its overall time and being able to go from there. Henry, thanks for the like. I always appreciate it for us being able to get in and being able to go from there. Tickets will stop at 5 p.m. Eastern Standard Time. I have to make sure that I send out to the links for the people that have been able to purchase it so they can be able to get into it. Once again, you will end up getting the book, our Forex trading book that will end up helping you out for us being able to get started called Success in Forex. You will end up getting equity management system on being able to learn and being able to have something kind of like what we have with our 5-star Forex Money Advisor that allows you to be able to trade and be able to trade safely. You will learn how to be able to set up your broker, learn different trading styles based off of that, and also be able to learn how to be able to trade with other people's money. That's my favorite thing. Being able to being able to get into a trade and being able to squeeze all of the profits out of that overall movement and be able to use compound interest to your overall advantage. Now, Once again, you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you subscribe to Trade with Travis on YouTube. And please make sure that you end up catching in and commenting on the videos and sharing this with people that you think that will end up being affected to the positive side with this. We all got to believe in ourselves and be able to go into trades and being able to take back your overall financial independence when it comes down to that. And this is exactly what we do each and every day. Until then, plan your trade your plan. I see each and every one of y'all tomorrow for another trading opportunity.